So I have an idea that maybe you'll if you want to uh, uh, revisit the class, you can. I'm going to share over the weekend the link for you to access this particular video if you want to go through it again. So today I want us to do something on errors and suspense account. That is the topic for our today's class. This is one of the topics under adjustments, and this is should be our final adjustment. Remember, we've done accruals and prepayments as our first adjustment. We also did something on provision. We did something on control accounts. We did something on disposal, acquisition of assets. We also did something on depreciation, and errors in suspense account should actually be the last element under adjustments. So normally, under the stages of preparing the financial statements, if you're an accountant and you want to prepare the financial statements, remember in our first topic we said it begins with collecting financial data. As an accountant, you collect financial data through various documents. It could be an invoice, a sales invoice, a purchase invoice, it could be a receipt, it could be a voucher. These are documents that contain financial data, and as an accountant, you use this document to record data for purposes of analysis and also for you to be able to summarize this data into various classifications. After doing that, we said number two, we normally have what we call journals. So journals are prepared from the financial data collected from the various source documents. That's what we said. Then every transaction in accounting is twofold, meaning that a transaction must have a debit and a credit side. For example, if I say cash sales, we are going to credit sales because sales are revenue, and you are going to debit cash because cash is an asset. So we call this the principle of double entry. Every transaction in accounting is twofold. And this is what we call the T accounts, the ledgers. They have the debit side and the credit side to record an accounting transaction. Now, after preparing the ledger account, the other stage is to prepare a trial balance. You cannot prepare a financial statement if your trial balance does not balance, meaning the debit side and the credit side of the trial balance should balance, should be equal. In a situation whereby the trial balance does not balance, we are going to conclude that number one, either there is an error, or number two, maybe there is fraud. Now there's a distinction between error and fraud in accounting. Error means it is unintentional. Maybe it could be another arithmetical error. Maybe when you are recording or balancing the T accounts, the ledger accounts, maybe you've done some computational error. That is an error. It is unintentional and it can always be corrected. But fraud, on the other hand, means it is committed with intention. For example, creative accounting, manipulating the books of account. Sometimes accountants manipulate the books of account, or this can be done either through understating revenue or overstating expenses to report less profit in order to pay less tax. Okay, that in accounting or that in auditing, international standards of audits, that is committed with a particular motive, and we call that fraud. It could be maybe the accountant want to steal some money. So in order to prepare the financial statements, we are saying from the source documents to the journals to the ledgers, the trial balance must balance. The trial balance gives you as an accountant a green light of now preparing the sets of financial statements: income statement, statement of changes in equity, statement of financial position, and cash flow statement. Now, what happens when the trial balance does not balance? We are going to discuss that shortly. But sometimes you can prepare a trial balance and it balances, but still you have committed an error without knowing. And we are going to see these types of errors. The trial balance balances, but you have committed some errors all the same. So what should be done when the trial balance balances, meaning you can proceed and prepare financial statement, but still there are errors committed in the ledger accounts. The errors must be in the ledger accounts. What can you do as an accountant? The other, we call that errors that do not affect the trial balance. Errors that do not affect the trial balance. The other scenario is you commit an error, okay, in the ledger accounts that causes the trial balance not to balance. Okay, meaning our trial balance will not balance. You cannot prepare the financial statements. And the only way to prepare a financial statement is to open a suspense account to detect the missing value. We call these errors that do not affect the trial balance. Errors that do not affect the trial balance. Let us begin with the first one. Start with the first one. First one is called errors that don't affect the trial balance. This means when you will be preparing or after preparing the trial balance, the debit side and the credit side will be equal. Okay, the total on the debit side and the total on the credit sides are equal. But we are saying again, in the ledger account, you have committed some errors, but these errors do not affect the balance. Okay, what are these types of errors that as an accountant, if you commit them, it will not affect the trial balance? What are these errors? So we begin with the first one. Let's begin with the first one. So this is purely theoretical, but we are going to do calculations. And you need to know all the 6 types of errors that do not affect the trial balance, because you might get a question. And kindly, not just knowing, but also providing examples. If you understand them, you can always provide examples, okay? Your own examples, not only you cramming what I've provided here. So let us begin with the first one. The first one is called error of omission. Error of omission. Now, this one is very easy. As an accountant, when you completely omit, okay, a transaction, for example, a sales transaction, okay, there was a transaction, maybe as a company, you sold goods on cash basis or on credit to a customer. Now, a customer here will be referred to as a debtor, okay? And remember, debtors are normally recorded in the statement of financial position as asset. The sales, whether cash or credit, should be recorded as revenue in the income statement. So you are supposed to open a cash, if it is cash sales, you are supposed to open 2 accounts, the cash account and the sales account. If the sales were made on a credit basis, you are supposed to open debtors account representing the customer, and the sales account. So these are transactions that took place, and as per the accounting rules, you are supposed to record this transaction in the books of account. That's what we call proper books of account. So if you omit, okay, this is an error. You know, a big company deals with so many customers, and actually it is possible for an accountant, because of the number of transactions that will go through his or her hand during the day, it is possible to omit a transaction. So you omit this transaction. Remember, in terms of recording, you are supposed to open, or you are supposed to record this in the data account and the sales account if it was made on credit basis. If it was made on cash basis, you are supposed to record this in the sales account and cash account. If you completely omit this transaction, you don't record it, it means you are not going to credit sales, and also it means you're not going to debit either debtors or cash. So the double entry principle will not be adhered to. So it means when preparing the trial balance, the figure that was supposed to appear on the debit side will not be there. The same figure that was supposed to appear on the credit side will not be there. So the trial balance will still balance. Okay, let me use illustrations for purposes. Want you to get this and to get this one. So just a minute. So today we are doing what? Control accounts. Control accounts. So allow me to share my entire screen. Allow me to share my entire screen. Yes, so control accounts. Let's assume we have our trial balance here. So trial balance has 3 columns, that is details, debit, credit. That is our trial balance. So I was saying, the example that I was trying to show you here, or to illustrate, suppose, just a minute. Yes, suppose XYZ Limited made some cash sales. So 2 accounts will be affected here. 2 accounts will be affected. The first account, if it is on cash, then it is cash account. Remember, in accounting, the principle of double entry, every transaction is twofold. Okay. So we have our cash account here. So the other account will be sales account. The other account will be sales account. sales account. Sales account. So we have said if XYZ Limited sold goods to a customer, okay, on cash basis, let's say worth 5,000, we are going to say their cash is increasing. So we debit cash sales 5,000. Then the same transaction should appear on the ledger account, the sales ledger account on the credit side, because sales records revenue. Revenue always appear on which side of the trial balance? Credit side. So we are going to say cash. This was done on cash basis 5,000. So when you are recording this account, the cash account, for example, if you are recording the cash account, you are going to say that the balance carried down, okay, the balance carried down here, balance carried down will be 5,000. So the totals will be 5,000, total there 5,000. In the sales account, okay, in the sales account, we don't use the word balance carried down. Remember the first class. The first class we said revenue and expenses, they are usually recorded in the income statement. Revenue and expenses are usually recorded in the income statement. So the balancing figure is always called what? IS, to mean that figure will appear in the income statement. But the other elements, assets, capital, and liabilities, you record them in the statement of financial position. So as an accountant, after opening these two accounts, you are supposed to take cash account, the cash. You are supposed to remember the balance carried down is on the credit side. When you are taking that balance to the trial balance, you take it to the debit side. So I want you to note that in the ledger account, the balance carried down will always go to the debit side of the trial balance. If the balancing figure in the ledger account is on the debit side, you are going to take it to the credit side of the trial balance. So here, we are going to say details, cash. Say cash 5,000. Then sales, because the balancing figure is on the debit side, it's going to appear on the credit side of the trial balance. So you can see if you are to balance that trial balance, it is going to balance. Debit side total will be 5,000 if this is the total total column. So we are going to have 5,000 here. You're also going to have 5,000 there. But now, when it comes to error, the error that we are discussing here, error of omission, it means, yes, you've opened the ledger accounts, but you forgot to take the 5,000 to the debit side, that is for cash. You forgot to take the 5,000 that relates to sales to the credit side of the trial balance. So the trial balance is still going to balance because you have omitted the value both in the debit side and the credit side. We call that error what? Error of omission. Okay. So the reason why the trial balance will not be affected is because the debit side and the credit side, which relates to the same value, have been omitted. So I hope that one is okay. We move on to the second type of error. We call this error of commission. Okay. So error of commission is an error that is committed when an accountant posts a transaction to the wrong account, but the wrong account belongs to the same class. So we have two things here, account and class. So you've done or you've posted a transaction to a wrong account, but that account is of the same class as to what you are supposed to record it to. Let me use an example. I'm going to use the same example, this one here. Suppose this account, suppose, let me give an example here, okay? XYZ made cash sales. Let me use an example of Kenya shillings 5,000 to a customer called Patel. The accountant, however, The accountant, however, recorded the amount to a customer called Peter. Now, I want you to note something here. Peter and Patel, all of them are customers to this company called XYZ. All of them. Okay? These two are customers. Now, we call this same class. All of them customers. If you sell goods on credit or on cash, someone is knocking. Allow me to add. So, I was saying that Peter and Patel, all of them are customers of this company. Okay? Suppose the company sold goods to them on credit. If that is the policy of the company, again, all of them are customers. They belong to the same class. But we have been told here from this transaction that I've tried to formulate that yes, XYZ made some cash sales to a customer called Patel, okay? But it was not supposed to be Patel, it was supposed to be Peter. Are you together? So it means the accountant initially had recorded the transaction as follows. Cash, we are going to of course, to debit cash, but the narration here will be different. We are going to say Peter. Okay? And then here, we are going to say, let's just assume that this was made on credit, because on credit is going to make a lot of sense, so that we open the client's account. So instead of opening a cash account, we open data or customer account. We can put a hyphen here and say Peter. This one will remain as sales. So if the goods were made on credit, we are going to open the data account, which belongs to Peter. Okay. The other account will be sales, and we are going to change here and say data, that is Peter. So that's how you are supposed to record that account. But we've been told this transaction was not supposed to be recorded under Peter's account. It was supposed to be recorded under a customer called who? Oh, nimewachanganya. The XYZ credit sales to customer called Patel. The accountant, however, recorded the amount to Peter. Yes, the accountant recorded the amount to Peter, but this transaction was supposed to be recorded under an account by the name Patel. So that does not affect the principle of double entry, because even if you are to correct that error, how do we correct that error? And this is important. To correct that error, you are going to come to Peter account, then you say error here. You just write error, so that account is now 0. That account is now 0. We don't have balance carried down. Then now you open the correct account. You open the correct account. The correct account now you are going to say here Patel. And you're going to have your balance carried down. But even if the error was not corrected, that's how you correct the error. You write error on the opposite side of the account where the error was committed for it to become 0, so that we don't have balance carried down. Then now you open the correct account. But even if you are not, you did not open a new account called Patel, the same figures will go to the trail balance data, whether Peter or Patel, 5,000 on the debit side, then sales 5,000 on the credit side. So you can see this is a good example of an error that does not affect the trail balance. Error that belongs to the same class. Peter and Patel, or in our good example here, the example that they have used here is T. Thompson and L. Thompson. All of them are debtors of this company. Are you together? So even if you do not correct that error, it still balances. Okay, so we call that error of commission. Error committed in the wrong account, but the account is of the same class. All of them are debtors. Okay, all of them are debtors. Now, it is important for you to understand this because when you'll be doing calculation, you'll be provided with narrations. Okay, and you have to correct the errors. Error of principal. Now, this one is quite different from the error of commission. Here, you do not only record a transaction to the wrong class, okay, wrong account, but also to a different class. So here, the sets of accounts, okay, are different. And I'm going to use an example. And this is the example they like using even in the exam. I'm going to use this one because this one will make sense. And I want us to discuss this together. I want you to tell me if a company purchases motor vehicle. Tell me the two accounts that you're supposed to open if a company purchases. So let's say XYZ Limited purchased motor vehicle worth 10,000 shillings. Yes. Two accounts that are supposed to be opened here. I'm waiting to hear from you. Tell me the two accounts. When you purchase a motor vehicle, what are the accounts, the two accounts that conforms to the principle of double entry?
The company account and the motor vehicle account.
Motor vehicle account and?
The company account. XYZ Limited.
No.
Cash. Is it cash? Maybe cash account and motor vehicle.
So to you is cash account and motor vehicle
account. Yes.
Okay. Anyone else? Now let me give you an option. Option one. I'm going to go with what you've said: motor vehicle, and cash account. Option two, I'm going to go with expense account and cash account. How many of you say option one, and how many of you say option two? Yes, tawauliza kila mtu. At least I know for Emily I know. Edith amesema option 2. Rahab, what's your option? Option 1 or 2? Diana? So Rahab is also saying option 2. Diana?
Option 2.
Diana, option 2. Greg? Paul? Greg, option 1. Paul? Okay. Now, I want you to get this and you get this well, because you cannot be able to do adjustments on suspense account or on errors if you don't get this well. Okay. Now, remember the basic rule of preparing the trial balance. Assets and expenses are debited on the trial balance. Assets and expenses, they are the only sets of account that are usually debited in the trial balance. Capital, liability, and revenue, they are always credited. So for example here, this is a sales account. Sales is a revenue. You automatically know that the balancing figure in that sale account should go to the credit side of the trial balance. Asset, debtors, cash, non-current asset, name them, debit side of the trial balance. Capital, liabilities, credit side of the trial balance. Now, you've been provided with an account here. XYZ Limited purchased a motor vehicle worth 10,000. So, someone may argue that purchasing a motor vehicle, it's an expense to the company. That when I purchase a motor vehicle, because I'm using cash, of course, cash is going to reduce. So that's an expense to the company. Okay. And expenses are normally debited in the trial balance. Someone else may argue that when I purchase a motor vehicle, that motor vehicle will help me generate revenue. So motor vehicle that I'm going to purchase is an asset. Remember in our first topic, the requirements for an item to be called an asset. There is a probability that that particular item will generate some future cash inflow. Number two, you own or control it. Okay. And number three, you must measure it. So this particular transaction here, it's not an expense. When you purchase an item of asset, I want you to get it well from today. When you purchase an item of non-current asset, be it building, be it motor vehicle, be it furniture and fixtures, you do not categorize them as expense. You categorize them as assets. Okay.
Okay.
So in this particular transaction, motor vehicle, we are going to open two accounts, motor vehicle account and cash account. Okay.
Yes.
So don't be tricked with the word purchased motor vehicle or purchased building or purchased furniture and fixtures. Yes, it's like an expense, but that particular item that you are acquiring, it's going to help you generate some future cash inflow. Yes. So for an accountant, the accountant that opened motor vehicle and cash account and an accountant that opened expense account and cash account, both of them, they are going to have the same total in the trial balance, because remember, motor vehicle is an asset. Assets are usually debited in the trial balance. Expense account, okay, are usually debited in the trial balance. So you are going to get the same total. But the one that's going to open expense account and cash account will have recorded that amount not only, okay, to a wrong account, but an account that belongs to a different class. Okay. Expense and assets, those are two different classes. Okay. In our previous era, that is era of commission, Patel and Peter, all of them are debtors, all of them are assets. Okay. But here, motor vehicle is an asset, and then expense is under expense account. Expense belongs to the income statement. Assets belong to the statement of financial position. So you can see these are two different classes of assets. So if you commit that error, we call that error of principle. Up to that point, tuko sawa? Tuko sawa mpaka hapo? Tuko sawa?
Yes.
Yes, so let us continue. The other one is what we call complete reversal. Okay? So complete reversal of entry for example, in our case here, this one is very easy. I'm not going to dwell here so much. So you can see here we had two accounts, data account and sales account. We know very well that in the data account, you are supposed to debit the 5,000. In the sales account, you are supposed to credit. But now you do the other way around. You credit the debtors account, you debit the sales account. But the amounts are the same, the transaction is the same. So yes, it's an error, but the trial balance will still balance. Tuko sawa? Because the amount appearing on the debit side of the trial balance and the amount appearing on the credit side of the trial balance, both of them are the same. Up to that point, we are together. So we call that complete reversal, okay, of entries. Tuko sawa? The other one, which one? Again, this one is very easy. I'm not going to dwell so much on this one. Error of original entry. This one, original. The word is original entry. So you are supposed, this was a transaction that was supposed to be made for credit sales worth 5,000. Instead of you recording 5,000, you record 4,500. 4,500. And you do the same in the other account. You have understated the accounts. 4,500. You have understated the accounts. So the balance here will be 4,500, 4,500, 4,500. So this one means that the trial balance will still balance. The trial balance will still balance because whatever you have recorded on the debit side is the same value that's going to appear on the credit side. So we call this original entry. You've recorded the wrong amount, okay, while opening the ledger account. Tuko sawa mpaka hapo? So either you've understated, but the understatement, whatever you've done on the first account is the same thing you've done on the other account that relates to the original account. So in our case here, data account and sales account. Okay. So up to that point, we are okay. Tuko sawa mpaka hapo?
Yes.
The last one, compensating errors, from the word compensate. These are errors that compensate each other. And this one, let us assume that XYZ Limited made credit sales worth, let me change the amount here for you to understand, worth 985 to a customer called Patel. Let me delete the other sentence. Okay. So if the credit sales that was made to Patel is worth that amount, so how do you record that? You're going to say here 9. So instead of recording 985, this way I want you to understand. Instead of recording 985, maybe you had some I issue, you record the amount as 958. 958. So even in the sales account, we are going to have 958. You've interchanged the 5 and the 8. Are you together? But later on, you realize that you've done a mistake. 958. Let's say 958. That's the total. Someone is knocking. 958. 958. Acha ni mwadi kwanza. Sijui ni nani huyo anakuja akiwa amechelewa. Brian Mose. Is Brian Mose. Anyway, check hiyo baadaye. So 958, 958. So the total here will be 958, 958. Now, Later on, you realize, oh, I made some error here, or maybe there's another transaction. Let's say there's another transaction, XYZ Limited, maybe made credit sales to the same person, but this time round, the amount was, let's say, what is someone to do this? What is 985 minus 958? What is 985 minus 958? Someone?
27.
27. So
Yes.
So maybe you the next time there's a transaction of 1,000, but instead of recording that 1,000, because you had done some errors before, you record. So here you come, you record sales 1,000, and you've said 25 or 27.
27.
27. So you record 20, 10, 27, and then you come here again, data, you record 10, 27. Remember, the first set of transactions is supposed to be 958. That's an error. You know, in accounting, from the first topic, you are supposed to record the actual transaction. So these two transactions, they have an error. But this error, you've already compensated the error by overstating, because you had understated the first transaction. You have compensated that transaction by overstating the second transaction. So we call these compensating errors. Are you together? So the trial balance would balance. The trial balance would balance. Okay, so you compensate that error on another different transaction. So up to that point, are we together? Tuko sawa?
Yes, yes.
Now, this is what you need to know at the end of that particular subtopic, errors that do not affect the trial balance. You are not supposed, okay, to adjust those errors on the suspense account. Errors that do not affect the trial balance are not corrected in the suspense account. I think I should write that somewhere. That one is very, very important. Don't know where. Where can I write them? That note, NB, allow me to write NB here. NB, or you can also write it somewhere. Errors, very important. This statement is very important. Errors that do not affect the trial balance should not be corrected in the suspense account. Now the question is, where are you supposed to correct them? They should be corrected on their individual accounts. So if an error has been committed, maybe in the debtors and sales account, correct that error on those accounts. If an error has been committed maybe on expense and motor vehicle account, correct those errors on those accounts. Are you together? So errors that do not affect the trial balance are not corrected on or in the suspense account. But now let us discuss the other types of errors. These are errors that affect the trial balance, and you can see errors that affect the trial balance go hand in hand with the suspense account. Okay, if the trial balance does not balance, the only thing you can do as an accountant is to open the suspense account, because it means either there's an arithmetical error, when you are summing up the values, or maybe you have recorded a transaction on one side and omitted the other one. You've not followed the double entry principle. Okay, or a transaction, yes, has been made, but instead of debiting and credit, you've debited twice on the same account. Okay, so it means the balancing figure, or the balancing figure in the ledger account that will be taken to the trial balance will either overstate one side of that account, meaning it's not going to balance. Okay, so this is what we call errors that affect the trial balance. Okay, so you can also be told in an exam, 6 marks, state maybe 3 or 4 types of errors that affect the trial balance, and I've actually explained some. For example, number 1 here, when you post a transaction on one side of the account, that means you only make a debit entry or a credit entry. Okay, that will make the trial balance not to balance. Okay, so for example, the cash sales or credit sales to Patel, you are supposed to debit data and credit sales. So you debit data and again you debit sales. That will affect the trial balance. Number 2, when you post a transaction on one side of the both accounts. Okay, so 2 debits or 2 credits. That's what I have explained. The first one was transaction is posted on one side of account, only a debit entry or a credit entry. Yeah, so that is the difference. One side of the account for example 1, example 2, you post a transaction on both sides of both of the 2 accounts, 2 debits, 2 credits, what I've just mentioned. So that one again is going to affect the trial balance. The trial balance is not going to balance. The third one, a transaction is posted correctly but different amount. For example, you made credit sales to Peter worth 500. Okay, so you debit Peter with 500, but the sales account you debit it with 600. Okay, so the amount should be the same for a transaction. For a particular transaction, the amount recorded in the ledger account should be the same. So this one means the amounts are different. The amounts you've recorded in one account is different from the amount you've recorded in the other account. The other one is error on balances of accounts. So this is where you commit a arithmetical error. We call this arithmetical error or mathematical error. When you are balancing the ledger account, balance carried down, you get the wrong figure. And for us students, most of the time, these are the types of errors that affects us. Okay, because of time, you are trying to rush, so you commit mathematical errors. Number 5, balances on an account is shown on the wrong side of the account when opening the ledger account. So you're supposed to debit. You're supposed to debit a ledger account. For example, for a data or for an asset, the balance brought down is supposed to be on the debit side. Instead of doing that, because you are in a hurry, you credit the opening balance instead of debiting it. So that will affect the trial balance. Okay, that will affect the trial balance. The trial balance is not going to balance. And then the other one is when you omit it from the trial balance account. And this one is not complete omission. You omit for only one account. You need to be careful with that statement. So yes, you've opened the ledger accounts, but you've omitted one balance in a ledger account. One balance in a ledger account. The trial balance is not going to balance because that account that you have omitted, okay, has a corresponding account that you've already recorded. So the trial balance is not going to balance. So my friends, when you open a trial balance and the trial balance does not balance, okay, you open an account called suspense account. The suspense account is going to help you trace where you've committed an error. Are you together? Yes. Now, for example, you've been provided with a set of values in form of a trial balance. The debit side of the trial balance, let's say it is 5,000. The credit side of the trial balance is, let's say, 4,000. They are not the same. So you are going to open a suspense account, and on the credit side, let me use an example here before we do an illustration. So we had here our trial balance. Assuming that this one is 5,000, let's say even 10,000. And this one 9,000. So the debit side total is 10,000. The credit side total is 9,000. So the trial balance did not balance. So you are going to open suspense account like this. And then you can see from that particular trial balance, the balancing figure, the figure that has failed to balance, is on which side? Credit side, 1,000. So in the suspense account, you record that figure on that side as balance brought down, okay? And that is 1,000. That's what I wanted you to know. If the debit side was short, okay, meaning the credit side value was greater than the debit side value, in the suspense account, the balance brought down could be on the debit side. That's what I want you to know. Are you to get up to that point? Tuko sawa? Any question before we do an illustration? Any question? Swali? Oh, Paul alikuwa na ideas zingine lakini we've already explained that. So kama hakuna swali, in our previous class we were doing something on, tulifanya this question 1A, we can do question 1B. So someone can volunteer and read question 1B. Someone to volunteer and read that question kindly. Ati huyu anasema quantitative analysis class 7. Kwani mko na QA 7? Hala? So someone to volunteer and read this question, at least tufanye hii swali. Give me 1 minute nakuja. Just 1 minute, I'm coming back. Someone may be mtu akuwe akisoma while I'm coming back. Someone to volunteer and read the question.
Gen Z Enterprise is a small retail firm. The trial balance of the firm failed to agree on 30th June 2022. The differences was transferred to a suspense account and financial statement prepared. On detailed review of the books, the following errors were revealed. The purchases day book had been undercast by that amount. Purchases on credit from the Mary Limited for 600,000 had been posted to the account as 6 million. A purchase of a machine worth 8.4 M had been posted to repairs of machinery account. A customer returned goods worth 1.2 M. A customer returned goods worth 1.2 M. This transaction had been entered in the sales return day book and posted to the debit of the customer's account. 7.2 M all to Jerry Limited, a customer had been omitted when drawing up a schedule of debtors from the ledger. A cash discount of 240,000 had been correctly entered in the cash book but not been posted to the customer's account. So you're required to prepare journal entries to correct the above errors and suspend account duly balance, including the opening balances.
Okay. So for this one, for this particular question, I want you to note, for most questions, you will be told what is the balance or the difference in the trial balance. But here, they want you to get, you can see under what you are required to do. Suspense account duly balanced, including the opening balance. So they want us to get the opening balance of the suspense account. But the question can be in two forms. You are provided with the opening balance, meaning your suspense account should balance. Every time you are provided with an opening balance in the suspense account, okay, the opening balance here means that difference in the trial balance, that made the trial balance not to balance. That difference is what we call the opening balance. So in most cases, when you are provided with the opening balance, you will be told, okay, whether it was a debit balance or a credit balance. So if it was a debit balance, you take it to you open a suspense account and you record it on the debit side. Okay. If it was a credit balance, you open a suspense account and you record it on the credit side. Are you together? But this particular question, we don't have the opening balance. We are supposed to get the opening balance. Other scenarios will be provided with a trial balance so that the total in the debit side and the total in the credit side, maybe they will not be the same. So what do? You just get the difference. And if that difference was affecting the credit side, you open a suspense account and you take it to the credit side. If that balance was affecting the debit side, you open a suspense account and you take it to the debit side. So for this one, let us do it. So this one is which sitting? This one was, which sitting is this? December 2022 question 1B. December 2022 question 1B. So December 2022 question 1B. Mati mko na QA saa moja? So this one is on suspense. Acha niandike suspense, nikituma this thing you'll be able to know. So suspense account. So we begin. NZ Enterprises is a small retail firm. The trial balance of the firm failed to agree on 30th June 2022. The difference was transferred to a suspense account and financial statements prepared. On detailed review of the books, the following errors were revealed. Purchases day book. Every time they say the word purchases day book, Just know these are just the normal purchases accounts, okay? So we start with the first one, and you are required now, under requirement, journal entries and suspense account. Under journal entries, they are saying narrations not required, but you may get other question whereby narrations are required. So what I'm going to do in this particular question, I'm going to provide narration so that you get to know how do we provide narrations. So for a journal entry, every time you come across the journal entry, this is the format of the journal entry. So details, then debit, then credit, yes. But for your case, you need, for the sake of the exam, you'll be required to have yes. So the first one there is sales day book had been undercast by 1200. So my friends, this is what you need to do. You can open a sales account somewhere. You don't have to open it. You know, that one is not a requirement. If you practice these things, at the end of the day, they are going to be at your fingertips. So this one is not supposed, you are not supposed to open this account, but for the sake of illustration in our class, or you can use the pages at the back of the booklet. You know that Casnable booklet is so huge, you cannot exhaust it. So we know very well that we are talking about purchases account. So you can open that account. So we open that account. For example, this one is purchases account. So we can open that account. For you to be able to, the reason why I'm opening this account is to help us not commit any mistake when adjusting those errors. Remember, there are two types of errors here. We have errors that affect the trial balance and errors that do not affect the trial balance. And how do you know these are errors that affect the trial balance or these are errors that do not affect the trial balance? This one is very easy. For errors that do not affect the trial balance, and we said they are not supposed to be adjusted in the suspense account, those errors are in the form of the three that we discussed, the six that we discussed. The error of commission, error of principal, those types of errors do not affect the trial balance, okay? And you are going to see how we are going to identify that. So we have our purchases account, and they are saying the purchase day book had been undercasted by 1200. We assume we know purchase is an expense. So if the balance brought down, we don't know what the balance brought down. Let's assume it was just XXX. That was the balance brought down. That balance, we've been told it was undercasted. Okay, that balance was undercasted, and they have not told us about the other corresponding account that was affected. If the other account has not been mentioned, you automatically know this is an error that affected the trial balance. Okay, so they undercasted this only in the purchase account. So how do you correct that error? You're going to say here undercast. It is 1200. Okay, so to assume kama ilikuwa balance breakdown ilikuwa 20,000, waka undercast hiyo 20,000 by 1,200. Ku correct that error ni kuiongezea the 1200 to be 21,200. Now because you've corrected that in the purchases account, we don't know the corresponding account that was affected. We don't know the corresponding account that was affected. So what do? The corresponding account that was affected, which we don't know, will be now our suspense account. And you record it on the opposite side. So suspense account is the only account you are supposed to open. Tuko sawa? So kwa exam, usifungue hizi account zote kwa the same nini. You are only required to open the ledger entries and the suspense account. The other accounts unaweza fungua huko nyuma, ni ya kukusaidia ku navigate. Are you together? Sijui kama tumepata hiyo point. Tumeelewa hiyo point? So we are going now to say purchases under cast here. Hiyo ndio ilifanya isi balance the first one under cast na ni ngapi? 1200. So now in the ledger account simply shows you what is going on. We are going to say we have debited what? Purchases account, purchases with 1200. Then credited what? Suspense.
Account.
Yes, suspense. With the amount inakuanga the same hapa 1200, and then you provide a narration. Bin, just say bin purchases undercast. Now corrected. As simple as that. Okay, as simple as that. And for your case, because you'll be doing this on a piece of paper, the one appearing on the credit side should be some few inches inside. Okay, for example here suspense, you can see it's not on the same level as purchases. Kwa sawa mpaka hapo? So tuendelee. So we are done with correcting the first one, purchases and suspense. And the reason why, or how did you know that you are supposed to open suspense account here? It's because we've been told purchases account was undercast, and we don't know the corresponding account that was affected by the undercast. So it means it only affected purchases account. So because we don't know the other account, suspense account will replace the other account. So that one affects the suspense account. So we continue. Number 2, purchases on credit from the Mario Limited. Okay, so the company bought some goods on credit from the Mario Limited worth 600, had been posted to the account as 6 million. Their accounts, you see, they have said their account as 6 million. So we have purchases account here and the Mario. So let us open the two accounts. Someone is saying something. Oh, Emily, you've been told to mute. So let me go back to what the question was saying. Purchases on credit from the Mario Limited for 600,000 had been posted to the account as 6 million. So you open the purchases account. You already have a purchase account here. Have purchase account. Allow me to open another account here. Can even open 2 accounts. So we have, remember these accounts, you do them at the back except suspense, just to help us navigate. Okay, so we have purchase account, and the other one is called the something. Let me check the Mario. Yes, the Mario. So we've been told that purchases on credit from the Mario for 600,000 had been posted to the account as 6 million. So the amount they recorded is 6 million. 6 million. Let me go to the Mario. 6 million. So remember the values are in thousand. But they were supposed to record what? They were supposed to record. So we know the two accounts. So they were supposed to record. So credit from the borrower for 600,000 had been posted to the account as 6. They were supposed to record this as 600,000. So how do we correct that error here? 600. So supposed to be recorded as 600, but they recorded 6,000. So we are going to, on this side, we eliminate that error. We eliminated the 6,000. Then we record it correctly. The Mario, it's the Mario as 600. So our purchase figure will be, the balancing figure will be 600. You come here, you recorded it as, it's an error. You recorded it as 6. This one is 6,000 or nimeandika 60,000. Yes. Error of 6,000. So unairecord. Acha nirudi hapo, naona kama nimefanya transaction error ya sites. Purchases also ni credit. So the Mario ni creditor, iko sawa. So the Mario ni creditor ama supplier 600. So that's how you are going to correct that error. So that error, my friend, will not affect the trial balance. Will not affect the trial balance and the suspense account, because ukiangalia pale balance brought down ilikuwa 6 million, 6 million, meaning kwa trial balance ilibalance. So what you are going to do, you only correct them on the individual accounts, the purchase account and the creditors account. The creditors account in our case here is the Mario. So in the, what about now in the ledger accounts? Tutakuja hapa tumedebit nini, tulikuja hapa tukafanya nini? You follow what you've done. You have credited 6 million in the purchase account to remove the error. So purchases 6 million. Acha tuanze na what kenye tumedebit. Tulidebit what? The Mario. Tunaanzanga na yenye umedebit the Mario to correct the error 6,000, and this side 6,000. Na huyu ni nani? Hii ni purchases. So itasema, acha niongeze hii purchases iende inside kidogo. So utasema bin purchases wrongly recorded now corrected. And then on the same, now recording the right transaction. How do you record the right transaction? Tumekuja hapa, let us check, tuka debit purchases. So again utakuja hapa useme purchases 600, and then the Mario 600. So utasema in a wrong amount posted now corrected. So hapo tumerecord mara mbili kwa sababu hiyo ya kwanza ni ya kueliminate the wrong account, to correct the wrong account, and then the second transaction has enabled us now to correct the error. So if you go back to these accounts, you can see if you are to balance this account, purchases account will be 600. In the Mario account, the balancing figure will be 600. So we've corrected that error. They had overstated the accounts. Okay. Number 3, we have a purchase of machine worth 8,400 or 8,400,000. It had been posted to the repairs of machinery account. Someone to tell me something about this account. This is what we call error of principle. Repairs of machinery account is an expense. Remember, repairs is an expense. Repairs. But machine is an asset. So you have not only recorded it in the wrong account, but also in the different class. So again, this one will not affect, you need to know, this one will not affect the suspense account. It's not going to affect the trial balance. So let us correct that error so that we get to know what are we going to post in the journal entries. So we have account, a purchase of machine. So we are going to have machine account. we are going to have repairs of machinery account. So allow me. So I'm going to open it here. Hapa chini. Remember, these accounts, you don't necessarily need to have them. The only account that you need to have is the ledger account and the suspense account. So here we have machine, account, and you have repairs. That's why it is important for you to understand the errors. Repairs of machinery. I can't remember, but we can check. So a purchase of machine worth 8.4 million had been posted to the repairs. And now machine is an asset, repair is an asset. So they had posted this in the repairs account, of course, on the debit side. So we come here and say, so we are going to say, this was purchases. It was purchases. So it was amount worth how much? It was amount worth 8,400. 8,400. So we want to, because you're not supposed to record this in the repairs account. This is a wrong class, a different class. So you're going to say correcting error. You record this on the other side, 8,400. Then you go to the machinery account. Now you record it there on the debit side, supposed to be there, 8,400. So that's how you correct that error. So how did we do that? We've credited the repairs of machinery account and debited machine account. As simple as that. So we come back here. So we've debited machine account because that is the correct account. Machine account. Allow me to add some rows here. So we've so you have machine account there, and then to eliminate the errors in the wrong account, that is the repair of machinery account, we have credited. So we come back here. The amount was how much? 8,400. So 8,400. So the narration will be being amount posted on a different account, now corrected. Okay, allow me to connect my laptop to the charger. In the next 15 minutes we should be done, so be patient. Shit. What? So let us continue. So where was I? What have we done so far? It is, yes, 84, being amount posted on a different account, but now you've corrected that error. So that's how you provide narrations. So let us continue with number 4. A customer returned goods. Now we are dealing with a customer. If a customer returned goods, means that these goods were sold on credit. A customer returned goods worth 1.2 million, that is 1200. This transaction had been entered in the sales return day book, that means the sales account, and posted to the debit side of the customer account. Now, if you make sales, we expect that in the sales account you are going to credit, and in the customer account you are going to debit. That's what we expect. But a customer returned good. When a customer returned good, in the sales account, we did this in the first topic. We are supposed to now to record this on the other side to reduce the sales figure because your sales has reduced. You're also supposed to record this on the credit side of the customer account to mean that the customer has returned some good, meaning his or her amount is going to, the amount they're supposed to pay is going to reduce. So we have been told here, a customer returned goods worth 1200. Okay, the transaction had been entered in the sales return day book, meaning it was already in the sales account, and posted to the debit side of the customer account. So let us open this. We are going to open two accounts here: sales and data, or the customer. But I can't see any error here because a customer returned goods worth 1200. The transaction had been entered in the sales return day book, meaning yes, it is supposed to be entered in the sales return day book because the customer has returned the good, and posted to the debit side of the customer account. Now this is where the error was committed, because if the customer returned goods on the customer account, you are supposed to credit. So let us open that account for you to understand. So this one is going to affect the trail balance because it was posted on the wrong side and did not affect. So we are going to have here, let me start with the sales. Even the sales return, let me use, you can use sales return or sales, doesn't matter. The effects are usually the same. And then the other account is of course the customer or data. Every time you see the word customer, it means the data. So data account. So the transaction had been entered in the sales return day book and posted to the debit side of the customer account. So I'm only interested with the customer account here. So in the customer account, we know if balance brought down, we don't know what was the balance brought down. Let's assume it was XXX. To correct that error, you are supposed to debit. If goods were returned, the balance, the debt owed by the customer is supposed to be reduced by the amount of goods that was returned, that is 1200. But instead of doing that, they debited the 1200. The 1200 was appearing on this side. So what do you do, my friend? And you need to be careful with this one. Number one, the error, you correct the error by recording 1200. And then number two, because that 1200 was debited instead of crediting, now you record it again for the right transaction. Okay, correct post. I want you to get this well. This amount of 1200 was debited instead of credited. So the first 1200 will be to cancel the error. And then now how about posting the correct amount? Now you post it correctly. So this will appear in the suspense account, okay? Because it only affected the debtors account. The sales account, we are assuming it was posted correctly. So we are going to come here and say sales, just say customer account. Sorry, it's supposed to be debit because the amount were posted on the credit side. So we are supposed to say customer customer account, you are going to add the two. 1200 plus 1200 is 2400. So we've recorded that in the suspense account because it was only affecting the customer account. The sales account had already been recorded. Now, when it comes to the ledger, we have, so number one, suspense account, we have debited suspense account with 2400. In terms of credit, we have credited the customer account with 2400. The 1200 was to correct the error. The other 1200 was to post now the right amount. So you can write and say in amount debited the customer, bin amount wrongly here, important, wrongly debited in the customer account, now corrected. As simple as that. Okay, and you need to know why did it affect the suspense account? Because it was only affecting the customer account. It did not affect the sales account. If it affected the sales account, my friend, then this will not affect the suspense account because we will have assumed there was a balance. So let us continue. Second last, we are almost there. 7.2 million owed by Jeru Limited, a customer, this again is a data, had been omitted when drawing up a schedule of debtors from the schedule. So this is a customer, a debtor. So they had omitted this amount, 7.2. Of course, if they had omitted and we don't know the other transaction, this one is going to affect what? The suspense account. So we open, just open, we open the data account only. So data account. So data account. If you go back there, the customer name is Jeru. So data by the name Jeru. So we don't know the balance brought down, but what we know is that there was some omission. And this omission, this is not total omission in both accounts. It was only omission that happened to Jeru account. So Jeru was supposed to pay this company, Ujenzi Limited, 7,200. But when Ujenzi Enterprise was drawing up the schedule of debtors from their accounts, they actually omitted that 7,200. So it means if they had omitted, what will happen to the debtors account on the perspective of Ujenzi Limited? It means, or as an accountant, how do you correct that error? You simply record it here, you post it. So this one was an error, it was omitted. So the error, the Jerry is supposed to pay more, so 7,200. So in the suspense account, if you come to the suspense account, you are going to credit the suspense account because the error was corrected by debiting the Jeru account, so 7,200. Then you come here, you write, we have debited the debtor who is called Jeru Limited, can say data with 2,200 and suspense account with 7,200. So this one is suspense account, and then we can write a narration. We write a narration here. Allow me to add some rows here. going to say bin. So bin amount it was what? You have to understand the transaction. It was omitted. Bin amount omitted. Bin amount omitted in the customer account or in Njeru's account now corrected. As simple as that. The other one is the last one, a cash discount. Now when you give a cash discount, you need to know that in the cash book, okay, it's going to be recorded in the cash book and also in the customer's account. So here we've been told a cash discount of 240 had been correctly entered in the cash book. So the cash book does not have a problem. We have recorded it correctly in the cash book, but has not been posted to the customer's account. Now, if you give a customer a discount, supposed to reduce his or her debt. So meaning in the customer account, you are supposed to credit to reduce the debt. So suppose we use this example. Suppose we have this data called, okay, we don't know the name of the data. So suppose we just have a data here. We have a data here. The balance brought down for that data is that, but he has been given discount, but in form of cash, but does not been recorded. So we are going to record it because it was not recorded, 240. But because it was not recorded in the other account, meaning it's going to affect the suspense account, because suspense account, anything that affects one account should appear in the suspense account. So discount to 240. So in the ledger accounts, we are going to say suspense, which we have debited, suspense account 240, and then the other account is what? The customer account 240. Then you write a narration here, bin, let me see the narration. You can always write it in your own language as long as you start with that word. So bin or what? Bin cash discount, bin cash discount, bin this cash discount not posted, now posted. So with that, you are done with the ledger accounts, and you get all your marks opening that ledger accounts. And then you finish it by closing the suspense account. And for this one, because we didn't have the balancing figure, it means the purpose of this one is to get the balancing figure. So you can see this one is that plus that give us 8400. So the balancing figure means it means that therefore the reason why the trial balance did not balance was due to this amount, 5760. That was the error. The error was the balancing figure, which is 5750. So this suspense account, the way you are seeing it, how many marks did it carry? 3 marks or what? Yes, 3 marks. But most of the marks is pegged on the journal entries. So this is how you open the journal entries. These are your journal entries here. Journal entries. Are you together? Any question? I want to give you one to try. Any question meanwhile? Tumeelewa? Are you together? I want to hear from you whether we are together. Tuko sawa? Kina Mumbi, Emily, Greg, Paul, are we together? Any question on suspense while I'm looking for a question for you people? So I want you to try this one. May 2021, kindly attempt this one, and I want to see it before our next class. So May 2021, question number 2, A. May 2021, question number 2, A. So any question, niwawache mjitayarishe for QA. Rahab, Brian, Diana, Edith, Paul, Greg.
I am fine for now.
Okay. What about the rest? So kama hakuna swali, then tukutane either kesho. I will communicate either kesho ama Sunday. Yeah. So you people have a nice evening.
You too.